while the Treasury revised its real growth projections down in South Africa's 2013 budget speech last week, the forecasts for the GDP deflator were revised higher, leaving growth in GDP in current prices largely unchanged over the medium term. Even so, because of the GDP growth disappointment in 2012-2013, the ratio of expenditure to GDP declines more slowly than previously expected over the medium term. Alwyn van der Merwe, Director of Investments at Sanlam Private Investments, joins us now from our Cape Town studio to discuss the investment implications of the budget. Alwyn, thanks very much for your time. We've obviously had time now to digest Budget 2013. And I suppose you've got to liken it to any household budget, that you've got to put out your wish list, your required targets, but the reality is in the execution, and that's what's up for debate now. Are we going to be able to meet the targets as put out by the Finance Minister? And perhaps let's start with this budget deficit number that surprised everybody to the upside. The market was disappointed, and so too was the like of Standard & Poor's, with Conrad Royce saying that it really caught him unaware at 5.2% of GDP. But let's throw forward to 2015-2016. Is 3.1% of GDP feasible in that time frame?
You know, I would certainly have my doubts. When the minister last year thought that he could make 4.6% deficit, I thought he was rather unrealistic, because our assumptions on the growth expectations were certainly lower. And I think if you look at his assumptions now, he reckons that over the next 3 years, that income will grow by about 10% per annum over the next 3 years, and he will only grow the expenditure line by just shy of 8% per annum. Now, if you look back at the last 3 or 4 years, which are arguably not normal years for the minister, they certainly didn't have a track record to record those kind of numbers. What worries me a bit is really the 10% growth in the revenue side. To my mind, you know, in all likelihood, economic growth might still be slower than what many people expect, and we certainly depend on very decent growth from offshore to get our growth projection higher. Now, if you don't get the growth, then I think the revenue line will be under pressure, just as we've seen. You know, that happened in the second half of 2012, where the company tax in particular disappointed significantly, and that was as a result of the events that we've seen in the mining industry, but general weakness in the economy as well. So all in all, I think he might have been too optimistic on the revenue side. And again, if I look at the expenditure growth that we've seen over the last 4 years, I think it was too conservative, given the political demands that we've seen coming through into the system over the last year. Again, he was, to my mind, too conservative as far as the expenditure line was concerned.
Let's just focus.
All in all, don't agree.
Let's focus on the global GDP number that the Finance Minister put forward, around about 3.5%. And he did make the comment that we were going to see a tough environment for the next 3 to 5 years out. So again, that begs the question why he was so optimistic, given that we are buffered by that global scenario.
Yeah, Lindsay, I think again, the 3.5% I don't think is completely unrealistic. The 3.5% probably ties up with the IMF number. But I think what is important for South Africa is the nature of that growth. Over the last 10 to 12 years, our growth got a significant boost from the nature of global growth, which essentially came from the developing world. And the demand for commodities from the developing world was significant, and that boosted our economic performance. If you look at the nature or the direction that China in particular wants to take in future, is that they want to rely less on investment spending and more on consumption expenditure. So if you take that into regard, it's not the 3.5% that worries me a bit, but really the nature of the global growth, which might not be that beneficial for South Africa compared to the previous 12 years.
Debt to GDP settling at around 40%, is that viable?
You know, to my mind, if you just take a step back and you say, well, if we think that they are unrealistic, then he's got a few options. You know, you will either see that taxes need to go up to fund the higher deficit, and if taxes need to go up, you know, maybe the debt doesn't need to go up as much. But if he says, listen, the political demands are real, and we've got to address that. And we can't really milk the tax system anymore. Then it does mean that he needs to go to the market to fund the deficit. And then if that is the case, the 40% where he sees it stabilize might be a bit too conservative, and we might see that number being higher than the 40% that he forecasted.
Alwyn, there was much debate as to whether we were going to see taxes going up this time around. And of course, a number of people were surprised that we didn't see that move. How much do you think that that had to do with the fact that next year is an election year?
Yeah, but I haven't even thought about that question. I simply just thought that when he didn't raise it,
were you surprised when he didn't raise it?
The fact that taxes weren't raised. He was just well aware of the fact that the economy is under severe pressure, and if you hike taxes in that environment, of course, you will just reduce the economic growth rate, which you can ill afford at this particular point in time. So that was my first assumption. Then secondly, of course, they have announced that they're going to look at an overhaul of the entire tax system, and I think Judge Dennis Davies will head the commission who will look at that. And I think against that background, for me, it wasn't really a surprise that we've seen significant tax increases. There were a few tax increases or new taxes in the pipeline, like the carbon tax that we've seen. But overall, he just did the normal thing by hiking the sin taxes, and he just exploited it really on the edges. That is all we've seen. But I think, again, against the background of a weakening economy and against the background of a commission that will look at an overall tax system in South Africa.
Let's move now to investment themes that stand out for you from this budget.
Yeah, I think if you just look at the equity, if I may start with the equity market, if you look at the equity market, the one sector that did particularly well over the last 3 years or so was the consumer sector. So the cash retailers did phenomenally well, particularly shares like Shoprite, but not only the cash retailers, Mr. Price, they've done fantastically well. And part of it, of course, was as a result of the so-called social grants. But I think what we've also seen is that wage increases in the government sector in particular outweighed inflation by a long shot. So that created a lot of spending power in the economy, and that drove those share prices, in my mind, to very, very high multiples. What we've seen in this budget, firstly, the social grants, I think, went up by about 3%. That is not not a real increase. But I think there's also awareness that you can't continue with a deficit of 5.2%, can't continue expenditure on the consumption side of the economy, where you actually need expenditure to create growth or economic growth capacity. You can't continue with that. And as a result of that, since the budget, in fact, since the beginning of the year, we've seen that some of these shares in the consumer sector came under severe pressure. And I think it's a question of valuation, and also maybe that the major tailwinds that the sector has experienced over the last few years, that is probably has come to an end.
Do you think it's a matter of time before?
I think the other sector.
Before we move on from the retailers, do you think it's a matter of time before we see a dramatic re-rating to the downside? I know that started at the beginning of this year, but do you think there is going to be a calamitous fall going forward, Alwyn?
It's always very tough, as an analyst, to come to forecast a calamitous fall. That is certainly not my view. I think if you look at how well those companies have been run, and I take Shoprite as an example, it's not a question of all fall down. I mean, Shoprite still has got very ambitious plans to grow in Africa, and remember, it's not such a big part of the earnings at the moment. We still see consumption expenditure grow, but it's just the growth rate that we see that will come under pressure, and that will come down. So I think it's just a question of the de-rating. And I think some shares, if you see some of those consumer shares disappointing the market, I think there you will see significant falls. But those consumer shares that I think will still match the earnings growth expectations of the market, they will just de-rate, I think, gradually over time. So it's not a sector that we would go into now, but it's not a sector that I would think will just completely fall out of bed. I think some shares might well experience a lot of pressure if they disappoint on the earnings line.
Should we read more into the Finance Minister's comments around the unsecured lending environment? He adopted a very let's say, strict tone when it came to how he's working with the National Credit Regulator to alleviate pressure in that space?
Yeah, I mean, you should always pay attention to what he says, but then you've also got to look at the reality. And I know a lot of people argue that we've seen a bubble in unsecured lending, and I think there are certain practices that you can't condone. But I think the major players have been quite responsible in the way that they've lent money to their consumers. And if you look at the total size of unsecured lending, it's about 20% of the total lending in the economy. So I don't think we've necessarily seen a bubble. I just think that people should be aware that the practices they need to follow, that those practices should be ethical, and therefore, you know, I think those lenders themselves, in terms of their credit criteria, will be quite conservative going forward. So it's not something that unnecessarily concerns me.
I interrupted your train of thought because you were going through how budget's impacting the equity environment. We started on the retailers and we never left that space. There was a further comment that you wanted to make.
Yeah. You know, the one sector that was certainly interesting from a contrarian perspective over the last 18 months or so was the construction sector. As you know, the construction sector undoubtedly went through a bubble phase in 2008, 2009. And then the sector got derated significantly, and some of those shares started to look quite interesting to us, at least. And for the last 2 years or so, the minister spoke about construction or infrastructure spending of about 850 billion. Yet we haven't seen a lot of detail on that. And we were just looking for a trigger that will, let's say, unlock a re-rating in that particular sector. And it's interesting, since the budget, we have seen some of those shares performing quite well, despite the fact that there's a inquiry going on into the sector. But if you look at shares like PPC, if you look at Wilson Bailey Homes, which is arguably the best in terms of quality in the sector, we've seen pretty decent support there. And it just seems to me that the 827 billion that they want to spend over the next 3 years, that at least somebody's going to look at the efficiency of the spending, firstly. And secondly, I think there's certainly been more detail in terms of the projects that they want to tackle. And about half of that, of course, will happen through state agencies as well. So I think...
so this is the time to buy, are you saying...
In terms of the selection.
Are you saying this is the time to buy construction stocks, Mr. van der Merwe?
I certainly think it is time. I think it is time to, if you don't have them, to acquire some of those.